Hi everyone. Wednesday's budget may have been less severe in some areas than anticipated, but it still delivered several impactful changes to financial planning, which we'll cover in today's video. We pulled together some of the main changes, what it means, and how does it affect you. On the positive side, freezes on income tax thresholds, which gradually erode how much you earn before paying high rates of tax, were not extended beyond 2028. The minimum wage and state pension also saw welcome increases, and thankfully, pension tax relief and tax-free cash allowances remained unchanged. However, the day held disappointments: significant increases in capital gains tax, increased stamp duty for second home owners, the removal of pension assets from inheritance tax protections, and substantial national insurance hikes for employers. Small business owners in particular bore the brunt of these measures. Let's break down some of the key points you need to know.
So first, there's a rise in capital gains tax. This is a profit you make when you sell something that's increased in value. The allowance remained the same, actually, at £3,000. The lower rates increased from 10% to 18%, and the higher rate from 20 to 24%. Changes coming in the 6th of April 2025. There's been no changes to capital gains tax rates on the sale of second properties. This increase mainly impacts anyone selling shares, second homes, rental properties. It doesn't impact any gains in your ISAs.
Currently, business owners may qualify for a reduced rate of capital gains tax on the sale of their business, thanks to business asset disposal relief. This relief reduces capital gains tax to 10% on gains from eligible business assets, although specific criteria is needed to qualify. The Chancellor has proposed increasing the business asset disposal relief rate from the current 10% to 14% in 2025, with a further rise to 18% in 2026. Entrepreneurs are allowed a lifetime allowance of up to £1 million. The initial increase to 14% will take effect from the 6th of April 2025, followed by the rise to 18% in 2026. This change will affect business owners planning to sell part or all of their business, as it will increase the capital gains tax due on any gains realised from the sale.
Inheritance tax changes are among the most significant. The current thresholds are frozen until 2030. This means you have an allowance of £325,000 and possibly a resident nil rate band of £175,000. Therefore, for some couples, the allowance can be up to £1 million. There are other certain exemptions. The main ones affected by the budget are agricultural relief. Farmers are able to claim an exemption from IHT when transferring agricultural land as part of inheritance. Business property relief being the other one. This is when a business owner can claim relief to ensure their family-owned business can survive when a business owner dies. What's changing? Well, both agricultural relief and business property relief, the first £1 million will continue to attract no inheritance tax at all. The assets above the £1 million threshold will attract inheritance tax with a 50% relief. Therefore, 20% tax will be payable. These changes will take place on the 6th of April 2026.
Currently, pensions are exempt from inheritance tax, which means they don't count towards the taxable value of an estate on death. However, the government is planning a significant change and intend to end this exemption. Starting in April 2027, unspent pension pots will be subject to inheritance tax. This change could affect how people decide to access their pension funds over time. Your spouse can still inherit your pension on death and remain outside the estate. Primarily, this will affect those with unspent pensions in estates above the inheritance tax threshold. Right now, we're waiting on more detail from the upcoming finance bill, and we'll keep you updated with further analysis.
At the moment, UK employers pay a 13.8% national insurance contribution on employees' earnings above £9,100 per annum. Employer national insurance contributions will increase by 1.2% to 15% in total, with the earnings threshold dropping to £5,000, impacting many employers. Additionally, the annual employment allowance will double to £10,500, a relief for eligible employers, but with tightened eligibility criteria. When will this change take effect? Well, from the 6th of April 2025. Who will this affect? Employers. The extra cost for the average employee will then likely range from around £650 to £1,000.
So, in summary, this budget introduces substantial changes in pensions, inheritance tax, and business tax landscapes. These shifts underline the importance of reviewing planning strategies, especially for business owners and those with pension assets. The good news is there's no need to panic, as there's no proposed changes before the next tax year unless you're buying a second property. And we'll be working with you and giving you more information between now and then. Thanks for tuning in. As a team, we're still working on the effects of the budget, and we'll keep you updated in future posts and during our planning meetings. Please keep in touch, and if you have any questions, let us know.